Hello and welcome to Livewire's The Pitch. I'm Ali Selby and today we're going to be learning about the opportunity in small and mid-cap stocks today. To do that, we're joined by Wilson Advisory's Head of Investment Strategy, David Cassidy. Thank you so much for joining us today on The Pitch, David.
Pleasure, Ali.
Okay, let's talk small and mids. They've obviously recently underperformed their large cap counterparts. Do you feel like that could reverse in 2024?
Yeah, we do think that. If you look at it a little bit more on a short-term time frame, the Aussie small cap index has outperformed the large cap index over the last 6 or so months, not by a lot, but there's a bit of a bottoming process happening there. So notionally smalls have done a little bit better than large on a 6-month view. Globally, we've still got this obsession with mega cap tech, so smalls are still lagging, albeit when we look at some of the data in the US, I think the equal weighted S&P outperformed the cap weighted S&P in March.
Wow.
So that means that sort of the mid caps are starting to come through. And I think even when you look at year to date, it's pretty close now between equal weighted S&P and the cap weighted. So I think there are some signs both in Australia and to a lesser extent in the US that the smalls are starting to perform a little bit better. So that's encouraging.
Okay. Do you feel like that could continue though? And are there any historical examples you could point to that kind of remind you of this, what we're seeing now in markets?
Not so much from a timing perspective, but certainly the valuations both here and globally favour small caps. That's not necessarily a great timing tool, but it's nice to sort of have up your sleeve. I think if you look at the history of rate cuts and small cap performance, that's typically a positive signal for improving small cap performance, particularly if it ultimately generates better economic growth, both globally and domestically, and that's our base case. So if you look historically, when do smalls do well? Generally when there's a decent global and domestic growth story, and we think that's coming off the back of rate cuts. The valuations look good. I think positioning has been quite skewed towards large caps. I think there's scope for that to change. So I think all the pieces are falling into place for better small cap performance over the next year. As I said, I think it's starting, but I think things are looking quite good for smalls and mids over the next year or two.
Are there any sectors that you think could really lead the charge and on the other side of that could struggle over the next few months?
We'd probably be a little bit cautious on tech just to the extent that's been the story that's driven the large caps. I think perhaps some of the more cyclical areas of the market that have done less well should do better under the sort of backdrop of rate cuts. So some possibly those neglected cyclical areas, even small cap resources that have been on the nose in recent times, I think are looking interesting as a bit of a contrarian play.
Do you feel like investors could use a broad brush index approach to take advantage of the opportunity in small caps, or is a more active approach recommended in this kind of environment?
I think for smalls, we typically of the view that you want to be very active. We sort of characterise things, even though I've spoken about a better environment for small caps in a general sense. I do think small caps are an alpha market more so than a beta market, particularly in Australia. When you look at the small cap benchmark, look at the long-term performance, it's fairly uninspiring. It's better globally. Really what you want to buy, I think, particularly in Australia's case, is exposure to good managers. So from that perspective, if you look at history of the best managers in Australia, they've outperformed the small cap index by a long way. So it's very much, I think, an alpha story. But even in the case of global, I think you want to go with an active manager.
Okay, I know they say that past performance isn't a reliable indicator of future performance. So what criteria should investors use to identify those awesome small cap managers?
Yeah, I don't think it's that different to picking a large cap manager. We often talk about the 3 Ps: performance, process, and people. So we look for a track record, relatively consistent track record over a relatively long period of time. We look at the process. Do we understand the process? Does it make sense? Is it logical? And I guess, are we comfortable with the people? Are they people who've generated the performance historically? And from that perspective, that's important for us as well. So performance, process and people is key for us.
Okay, well thank you so much for your time today, David. It was awesome to have you on The Pitch.
Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.